Hi, this is Steve Bray with today's Lone Star Lending Starbits rate update. Starting this holiday week, we find mortgage rates still hanging out in the same range they've held since the first part of October, albeit at the lower end of that range thanks to flight to safety market action last week. And it's that action that possibly could deliver an early Christmas present of lower rates in the upcoming weeks. First, let's get through this week. Holiday weeks like this tend to produce limited overall rate movement because few traders are tuned in. In the odd case that the remaining traders push rates higher or lower, the market probably will self-correct next week absent some unexpected headline. My conclusion is if you aren't risk averse, odds are you'll see similar rates next week given the current market sentiment. Looking out a little further, we have the most positive outlook for lower rates we've had since summer. While the U.S. economy still looks incredibly strong, global conditions aren't quite as rosy. Economists are starting to sound alarm bells about slowing global growth. On top of that, recent headlines about Brexit, the Italian budget drama, and emerging market difficulties are like wind gusts embedded in an increasing headwind. Traders mostly have been ignoring these negative factors given the prospects for rising U.S. inflation, increased government borrowing, and the Federal Reserve apparent rate hike plan, all of which support higher rates. However, last week's inflation report showed inflation remains tame. Friday, the Fed's vice chair acknowledged the potential effects of slowing global growth on the U.S. economy, which made traders question the rate hike plan. Overall, I think the momentum favors slightly lower rates, but if you're going to float your rate, be cautious. The U.S. economy still is a powerhouse, and I'm not convinced yet we've seen the highest rates of this cycle. That's Starbits for today. Please comment below and follow us daily on our Texas Lone Star Lending website.